Okay, how about now? Do you still see it?
Nope. Okay, it's here. Yeah, I
It's
can.
here. Okay,
Okay.
I guess I'll just explain without it. So,
Okay.
um, okay, I'll start from here. TDS or tax deducted at source, it means that your income is deducted from wherever you get the income. So, for example, in our case, when we get a salary, we get it from our payroll department or accountant or something like that. And before handing us the salary, they take a part and give it to the tax department, and only after that the remaining do we get. Okay, so every month this happens, and you can see that as a part of your pay slip. So the pay slip might have sections like basic, HRA, LTA, and income tax. There are other parts as well, but for now let's just focus on this. So these three parts, basic, HR, and LTA, they are part of your income, and from that the income tax is reduced, and what was left is what you get in hand. That's your in hand salary for the month. So we'll talk about basic, HR, and LTA later in the presentation. But for now, just I just want to show you that this this is a part of your payslip. So, okay, so now let's move on to how is income tax calculated. So there are two ways in which income tax is calculated. One is the new tax regime, and the other is the old tax regime. Uh, these are just like two different ways of calculating taxes, but they have one thing in common, which is known as slabs. Uh, Slabs is like one of the most confusing topics about this thing, and but for now, we'll just focus on the old tax regime because it has a lesser number of slabs. Specifically, they have four slabs. If I'll explain what slabs are, but just now bear with me. So they have four slabs, and let's just say I'm just naming these slabs. First one is from 0 to 2.5, which is taxed at 0%. 2.5 to 5, taxed at 5%. 5 to 10 lakhs, taxed at 20%, and greater than 10 lakhs, taxed at 30%. So for this demonstration, let's just consider slabs are like boxes or suitcases. Let's just consider there are suitcases where you can keep your income. Uh, so, and each of the suitcase has a certain capacity, and the capacity is you can calculate the capacity based on the amount that is written on this. So, for example, the first one, the one at the bottom, it shows 0 to 2.5. So its capacity is 2.5 minus 0, that is 2.5 lakhs. So this slab, you can put 2.5 lakhs rupees into it, and that's the limit. Similarly, the one above it, it is from 5 to 2.5. So 5 minus 2.5, 2.5 lakhs. That is the limit of that one. Then we have the third one, which is 10 to 5. So the capacity for this suitcase is 5 lakhs. And then we have the fourth one, it is about 10 lakhs, whatever amount. So let's just say it's the capacity is infinity. You can put how much ever money amount into it, but only after you fill the first three slabs. So let's say your income is 3 lakhs. That's your annual income. Okay. So let's say your annual income is 3 lakhs. In which case, you'll first fill the first slab, that's for 2.5 lakhs, and the rest 0.5 lakhs you'll fill it in the second slab. Okay, so that's how your income is divided into slabs. Okay, it's basically like putting your money into suitcases, and each suitcase has a different capacity, and it's always in this order from bottom to top. Okay, so let's take another example. Let's say your income is 12 lakhs. In this case, we will have to fill all four suitcases. First one 2.5 lakhs, second one 2.5 lakhs, third one 5 lakhs, and the last one will contain 2 lakhs. Together they make the 12 lakhs. So these are how this is how your income is divided into slabs. So uh, now that we know how it's divided into slabs, we can look at how tax is calculated. So for let's say for putting money into each of these slabs, you need to pay a certain amount as tax. Okay, so putting money into the first slab, you don't have to pay any taxes. It's 0%. So its taxes 2.5 lakhs into 0%. That's zero. Okay, but for the second slab, it you still have 2.5 lakhs in them, but here you have to pay 5%. Hello.
Yeah, we can hear you.
Okay. Okay. So
Jagda, you're recording this, right?
yeah, I'm recording this.
Okay, great,
Let
great.
me make sure. Yeah, I'm recording this. So okay, I would say okay. In the second slab, again, you have 2.5 lakhs, and this time you have to pay 5% tax to put your money into it. So this time the tax is 12.5 thousand. Then in the third slab, you have 5 lakhs in this slab, and you have to pay 20% tax on it. So you have to pay 1 lakh tax. And for the last one, you have 2 lakhs in the last slab, and you have to pay 30% tax on it, which means your total tax, your tax for putting money into the slab comes at 60,000. So your total tax becomes 1 lakh 72,000. I'm sure the math's right. Okay, so yeah, that is how tax is calculated according to the old tax regime. Okay. If there is any doubt, or if you want me to explain it again, just tell me. Okay, I'm guessing no. Because even in the new tax regime, the tax is calculated the same way. So the only difference is in the old tax regime, like I mentioned earlier, we have 4 slabs, whereas in the new tax regime, we have 7 slabs. Okay, and in this case the slabs are more uniform. It's 2.5 lakhs each, and the tax rate increases at 5% till it comes to 30%, but the tax calculation done is the same. So both new tax regime and old tax regime, they have the same way of calculation of tax, but just the slabs are different. So that is how tax is calculated in both these regimes. So now let's come to the topic of filing an income tax return, or in short, we call it ITRs. So for this also, there is a difference between how we file ITR for new tax and the old tax regime. So for now, we'll talk about old tax, and then we'll go to the new tax regime. So for filing ITRs, you need to know a bunch of stuff, and these are like some of the terms that you really have to know in order to, at least these are things I'm familiar with, and these are things at least you should be familiar with in order to file ITRs. So we'll go through all of these terms one by one, and yeah, let's see if we can cover all of them and understand all of them. Yeah. Okay. So first, let's talk about tax exemption and tax deduction. I'll be using these two words frequently for the rest of the presentation. So that's why I wanted to talk about this first. I'll just give you a general idea what this is, and I'll explain explain about it in more details later. So you have your income, that is what you get. It can be a salary, it can be from a business, or if you're giving one of your properties for rent, the rent you earn, all that is your income, and you have to pay taxes on this, right? Actually no, you have to pay taxes on something known as the taxable income. Okay, so income and taxable income is separate. You don't have to pay tax on your entire income. The government has put some acts and rules that exempts some of your income from being taxed. and they're known as tax exemptions and deductions. So again, back to our example, let's say 12 lakhs is your income, and you go through the acts and rules of the income tax, and you find out that you can claim an exemption of 2 lakhs, and let's say tax reduction of 1 lakh as well. So when you reduce the tax exemption and deduction from your income, you get your taxable income. You do not have to pay income on your total income. In this case, that's 12 lakhs. You only have to pay tax on the taxable income. Okay. So in the earlier example, I showed you like 12 lakhs. You have to divide it to these slabs, right? Uh, Actually, when the tax is calculated, you don't have to consider your whole income. You only have to consider your taxable income. So it will look more like this. So your taxes will be actually lower than the calculation that we did earlier. So what are these tax deductions and exemptions? We'll talk about them. Yeah, this is okay. So if it was 9 lakhs, this is what your tax would look like. Your income tax would look like. So tax exemption and deduction are two different things, even though they basically are things you don't have to pay tax on. There are differences. We'll get to that later. But for now, let's look at basic HRA and LTA. This is something I showed earlier. It is a part of your payslip. Okay, it's basic HRA and LTA are three parts of your income. So basically, when in most companies, your income or your salary will be divided into generally these four categories. Uh, Different employers might use different names. For example, HRA might be uh, termed as rent. Like in my previous job, it was just written as rent and not HRA. There was different word for LTA as well. Uh, so yeah, but basically your income will have these four components at least, and let's look at what each of them are. Basic doesn't have anything special. It's just your income. That's it. It's just your basic income. Then comes HRA. It stands for House Rent Allowance. Okay, HRA is you can consider it as the limit of how much tax exception you can get for paying rent. Okay, so the government has the income tax department has set a rule that if you're paying rent, you do not have to pay taxes on that rent. Okay, that will be exempted from your income. You can reduce that from your income, and you'll be a taxable income will be lower. Let's say, for example, you get 3 lakhs HRA from your employer. Uh, this means that if the highest amount of HRA you can claim is 3 lakhs. What I mean by that is, let's say your rent is just 1.2 lakhs. You can reduce that from your income, and then your taxable income becomes 10.8. It's straightforward. But I mean, okay, it's straightforward. And in order to claim that, you will need something called a pay slip. I'm sorry, a rent slip. Okay, a rent slip is basically something you get from your landlord, and it says that okay, so and so person paid this much amount to this person on this month. So if you show this, you can claim claim tax exemption on your rent. But let's say, for example, your rent is 3.6 lakhs. Earlier, I told you that your HRA that you get from your employer is 3 lakhs, and that is your limit. So you cannot actually claim 3.6. You can only claim 3 lakhs as your rent, because your limit is 3 lakhs, right? Which I showed you earlier. HRA, that is the amount that you get from your employer, that is your limit. So even if your rent is more than that, you can only claim exemption up to that limit. So if you reduce that, now your taxable income becomes 9 lakhs. Okay. So yeah, I wish it was this pretty straightforward. However, the government likes to make these things so confusing that is the HRA is not the only limit for your rent. There are actually three limits for your rent. First one is the actual HRA. The second one is 40% of your basic, and then there is your actual rent minus 10% of basic. The government does this to ensure that I think people have done this like way past, I don't know, the employer pays most of their salary as HRA, so that they can claim a lot in as a rent as exemption. So in order to prevent that, the government has come up with this complicated way of calculating HRA. uh, so for HRA, you don't only have one limit, you have three limits. So putting using this in our earlier example. Oh, sorry, one more thing. So after after you calculate your limits, whatever is your lowest limit, that would be your actual limit. Okay, I'll just show you with an example. So back to our earlier example, you get 3 lakhs as HRA from your employer. So your actual HRA limit will become 3 lakhs. And let's say your salary basic is 6 lakhs, which will make 40% of your basics 2.5 lakhs. So now this becomes your new limit for HRA, because 2.5 or 2.4 is lower than 3, right? So this becomes your new limit. Now let's say that your rent is 3.6 lakhs annually, and if you calculate rent minus 10% basics, let's say again it's 2.4 lakhs. So now your HRA limit becomes 2.4 and not 3 lakhs, because out of these 2.4 is the lowest, and that becomes your HR limit. So let's go back to our earlier calculation. Earlier I said you can get 3 lakh of exemption, but it's actually 2.4, and your taxable income is 9.6. Now let's move on to the next one, leave travel allowance, okay, or LTA in short. So if you're traveling to anywhere in India, the cost of traveling to that place you can claim as an tax exemption. And let's say you go to a trip to, let's say, Shimla. Yeah, I calculated this based on a trip to Shimla, but it's rounded. Let's say the back and forth flight costs you 20,000 rupees. Let's say you stay at a hotel for 12,000, and you have other expenses of 1,000. For LTA, you can only claim the cost of transportation. You cannot claim the cost of accommodation, food, or anything else, just the transportation, hence the name leave travel allowance. But even here, there's a limit. Uh, the limit is the amount. For example, in this case, I said we are going to Shimla, right? The limit is the cost of ticket for a first class AC train ticket, not a flight ticket. So even if you go by flight, you need to find out what is the charge for a first class AC train ticket to the same place, and that will be your limit. So even if let's say for that train ticket it's 16,000 to the same place back and forth, it's 16,000. You cannot claim the 20,000. You can only claim the 16,000. And so yeah, you can claim LTA, but your limit will be 16,000. So you can travel to anywhere in India, and whatever is the price of the ticket to go to that place, price of the first class AC train ticket to go to that place, that will be a limit. And if it is a place where you cannot go by train, the government has some way of calculating what the price of that ticket will be, and that will be a limit. I have not done this before, so I'm not exactly sure. But yeah, you can. I'll talk about that later. There is a way of finding it. And another restriction is you can only claim this 2 times in 4 years. Everything else that I'm showing here, you can claim every year, but LTA, there's a limit. You can claim it only 2 times in 4 years. Okay, so yeah, another limit. So let's say, so based on our earlier calculation, our LTA was 16,000, and let's say we're claiming that. So now our taxable income becomes 9.44 lakhs. So now we have covered HRA basic and LTA, and these two that we did falls under tax exemptions. Okay, so now I'll define what tax exemptions are. Tax exemptions are basically things that you would regularly spend on, but the government has said, okay, if you spend on these things, you don't have to pay taxes on them. Okay, so tax exemptions are things that you spend on, and the government says you don't have to pay tax on them. Another thing, another spending that you can claim exemption on is if you have children, you can claim exemption on their education and hostel fees. However, here also there's a limit, and that is up to 2 children. So you can decide which 2 children to choose, and then you can claim if you have more than 2 children, you can choose which 2 children, and their fees you can claim the tax on. So okay, now we talked about tax exception. Now let's go to tax deduction. Tax deductions are extra investments that there are some investment instruments that the government has specified. If you are investing your money into these instruments, you can claim tax deductions on those. So tax exceptions are things that you might normally spend on, whereas tax deductions, there are things you have to invest in. Okay, so from our earlier word cloud, the rest of the rest of the terms I mentioned are all tax investment instruments, and you can invest in all these to get tax deductions. And let's go through all of them. First of all, EPF. This I think most of you will be familiar with, because it's like if you have opted this for this, it will come in your payslip. So other than income tax, your EPF will be another thing that's deducted from your monthly payment. And EPF is actually an instrument for investment, and it is known as the full form is Employees Provident Fund. It is basically a pension fund, and you invest money into this, and you can only take money from this fund once you retire. And or if there are other certain cases where you can take money from this, and I don't want to get into this. It's like a really complicated thing. If you want to know, you just check it out. But otherwise, I would say this is a good investment instrument, because EPF, when you're investing into EPF, you're investing in the government, right? And that is a very safe investment, because let's say our economy crashes, and if you're investing in the market, you won't be able to get that money back. So let's say the economy crashes when you're retiring and you need the money. The market is like a really unreliable source for that. Whereas if you can't get the money from the government, then there is no other way for getting the money. So like the government is like the last resort. So it is a good thing. It's a safe place. Even if the market crashes, there is a high chance you can get the money from the government. Um, so yeah, I would recommend, if you didn't opt for this, I would recommend you to opt for this. And let's say you are not working for an employer, and let's say you're you have your own business or you're self-employed. In that case, there is another thing called the Public Provident Fund. It is basically EPF, but in case of the EPF, the investment is done by your employer. In PPF, you can do the investment yourself. Okay, so this is an option for self-employed people, and yeah, it's short. In short, it's known as PPF. Um, and people can also invest both in EPF and PPF, but ideally just invest in one of them. Especially if you're young, like me, like I'm in my 20s. I do invest in EPF, but I'm not going to invest more by investing PPF as well. It is a safe investment, but since I'm younger and I can take more risks, I would opt for more riskier investment instruments. But if you do know, like if you get older, or if if you're giving advice to older people, EPF and PPF is a good investment option. So let's go back to the rest of the investment instruments. So okay, another thing that you can invest in is the is health and life insurance. This is something that I think all of us should need. If you don't have it, I really recommend you to get a health and life insurance. And a rule with health and life insurance is the earlier you get it, you'll get it cheaper. Okay, so if you're just starting out, if this is your first job, I do take time to research and get a health and life insurance. And yeah, the premium that you pay, like you have to pay a premium. Usually it's like annually or biannually. You will have to pay a certain amount as premium. The amount you pay as premium for a year, you can claim as tax deductions. So for now we are covered EPF, health insurance, and life insurance. All these amount you can reduce from your income. And now our taxable income, like based on this example, let's say if you're paying 5,000 for health insurance and 6,000 for life insurance, and now your taxable income becomes 9.11 lakhs. Now PMSBY and PMJJBY, uh, these are also insurances that you can invest in to get tax deductions from. Uh, these I've mentioned separately because these are schemes that were released by the government, and they were released as an option for people who can't afford premium insurance. Like they can afford the insurance premiums. They are like very cheap insurances. So PMSBY is and as it's a health insurance. It's a accidental cover, and you only have to pay 12 rupees per year, and you will get a cover of 5 lakhs. It's only an accidental cover. You will get a cover of 5 lakhs. PMJJBY is a life insurance, and you have to pay 330 rupees per year as premium, and you will get 2 lakhs of insurance. So these two also you can, like I said, these two also you can claim exemptions on. I do not recommend them because I'm sure you can afford better insurances, but these are for people that who cannot afford them. I have invested in PMSBY and PJJBY, but I started this investment long time back. The moment I took a bank account, I opted in for this. And you might also see that, like, if you're trying going to open a new account, they might give you this form and ask you to fill it. So this is what that is. And yeah, even if you don't have this and you want to opt in for this, you can go to your bank account, get a form, and fill it. That doesn't make the bank your insurance provider. The insurance provider is the government itself. It's just that the money will be automatically debited from your account. Um, yeah. So next one is ELSs. The next investment instrument we'll be talking about is ELSs. This investment instrument is the one that I invest in the most, and it stands for Equity Linked Savings Scheme, and it's basically a mutual fund. So there are some mutual funds that offer this option, and the government, if you invest in this, you can claim whatever you invest in this as a tax deduction. So more specifically, it is an equity mutual fund, which means that it will be investing the money that you put in this mutual fund into buying shares from companies. So okay, let's look at what a mutual fund is. Let's just briefly let's look at what a mutual fund is. Uh, so to invest in the market, you have two options. One, you can directly invest in the market, you can buy shares, but the problem with this is it is very risky because the share prices can go up and down. You'll have to monitor it constantly. You need to know when to buy, when to sell, and all that. I've tried doing this when I was in college, and it took a lot of effort and time from my end. So instead, nowadays, what I do is I invest in mutual funds. Mutual funds usually have is usually managed by a mutual fund manager who knows what he's doing. His employed to constantly look at the market and make informed decisions. So if you give your money to a mutual fund, the mutual fund manager will take that money and invest in the market, but in by taking more informed decisions, and you don't have to do that for them. I mean, you don't have to do that yourself. But you will have to pay a small percentage of your earnings as commission. It's called expense ratio. I'm not going to get into it. It's a whole different thing. So yeah, it is an equity mutual fund, and yeah. So all these things that we've talked about, ELSS, EPF, PPF, PMS, PY, PMJ, JY, life insurance, they all come under a section in the income tax thing called ATC. Okay, they all come under a section called ATC. One thing I didn't mention here is health insurance, because health insurance has its own section called ATD, and uh, yeah, it has its own section called ATD. So when I was talking about all these investment instruments, you might have noticed one thing. I did not tell you what the limit is for investing or claiming the tax deduction on this. This is because all of these instruments together have a collective limit, which is 1.5 lakhs. That is, every investment instrument that comes under the section ATC has a limit of 1.5 lakhs. So, okay, let's take an example. Let's say we are investing in an ELSS for 10,000 a month, which makes the annual investment 1.2 lakhs. So you can claim that as a tax deduction, and your taxable income becomes 7.92. But yeah, we need to consider our limit for ATC. So let's do one thing. Let's take a sum of all the ATC investments we have done, and it comes to 1.52 lakhs. Well, earlier I told you that the limit is 1.5 lakhs, so we'll have to reduce that to our tax deduction to 1.5 lakhs. So now the taxable income becomes 7.94. Now, another investment instrument that I left for the last is NPS and APY. NPS stands for National Pension System and APY stands for Atal Pension Yojana. Now, they're both pension schemes that were started by the government. Again, since this is run by the government, they are like relatively safer, but I do not recommend them because NPS has okay. NPS is basically a mutual fund because if you are investing in NPS, the amount will be sent to a mutual fund. It will be sent to a mutual fund of your choice, and whatever profit you will get, you will get it as your pension later on when you retire. So it is basically a mutual fund, so it has the risks of a mutual fund as well. Because, like I said earlier, even when you're investing in a, let's say, an equity mutual fund, there is the risk of investing in the market. Uh, so yeah, NPS is basically a mutual fund, so I don't really see why. But the thing is, in NPS there are rules like you can only take the money back when you retire, and even when you retire, you can only get like 60% of it in lump sum, and the rest you can only take as pension. Like every month you will get the money back. So like if you're okay with these, there are many such rules like that, and if you're okay with these rules, invest in NPS. But in my opinion, it's not that uh not that it's not worth it, I guess. And then there's the APY. APY is also a part of NPS, but APY is different. It doesn't put your investment in a mutual fund, or it doesn't put it in the market. The money put in APY is you're basically investing in the government. So and when you retire, the government gives you a set amount as the pension. I have APY again. This thing I opted for when I became 18 and just took an bank account. So I still have it. I haven't opted out of it, but I really do not recommend it. But if you want, you can join. Okay. Like I said, make your own opinions. So NPS and APY can be claimed under ATC, but as you saw earlier, we have already exhausted our 1.5 lakh limit. In which case, NPS and APY has a special privilege or something you can say. You can move the investment that you did in NPS and APY to a different section. Yeah, a different section called ATCCD. Okay, and ATCCD is a separate section that includes just NPS and APY, and it has a limit of 50,000. So it is up to you if uh, you can claim NPS and APY under either under section ATC or ATCCD. So if you have already exhausted your 1.5 lakh limit of ATC, you can put additional 50,000 under NPS and APY in ATCCD. So that's why I left NPS and APY for the last. So it's like an additional investment that you can do, but you should never always look at how much tax you can save. You should also look at, okay, if I, even if I don't save this tax, if I take this money like this, let's say you invest in 50K, let's say uh if I invest this 50K somewhere else, will I get a better return than NPS and APY? You need to consider that before you invest in this, uh, instead of just like, okay, I'm going to save tax, I'm just going to put it in
Just for
NPS.
me,
Hello.
sorry, like your voice is breaking. I think it was just for me.
I said, did anyone else face this issue?
Yeah,
Yep.
even
Okay, should I repeat from some place? Oh, okay, is the
Yeah,
problem
like
fixed? Or
last 2 minutes, or like 1 minute, just last 1 minute.
I'll just explain from this. Okay. I hope the issues fixed, or just tell me. Okay.
Yeah, yeah, it's better now. I think like we were with you till like 80 CCD is 50K limit,
Okay.
and yeah, till that I think we were with you till that point.
Okay. So you can claim NPS and APY under 80 CCD. However, I would not recommend it uh, because a lot of people might just invest in NPS and APY just to get better, more, save more taxes. But I would say don't do that. Instead, see if, like, okay, if I don't save the tax, instead I put this 50,000. Let's say you're planned on investing 50,000. Let's say you consider that, okay, I invested this 50,000 elsewhere. Will I get a better return than what I got from NPS and APY? Is it better than investing in NPS? You should always consider that. You shouldn't just immediately invest in things that will save or more taxes. So yeah, that's why I say, NPS and APY is not that good of an investment. But if you really do want to save taxes, like there are cases where like just 2,000 rupees, if you save, it will save you a lot of taxes. In those cases, yeah, go for 80 CCD. If you just want to reduce a small amount from your taxable income, then go for that. But otherwise, it's not a really good option. So, but just for this example, let's say we do invest 50,000 in NPS, in which case we claim that under 80 CCD, and now the taxable income has become 7.44. So yeah. So far we've done all this, and on top of that, the this is basically all the tax exemptions and deductions that we can claim. There's another one, health insurance, that I didn't mention. Like, it has its own section. Maybe if you want, I can talk about it later. But yeah, if you have health insurance, you can also claim it under here. The limit for health insurance is, if you're claiming it for yourself or your spouse, you can claim up to 25,000. If you're claiming for senior citizens, you can claim up to 50,000. So if you have health insurance, you can add claim that under section 80D as well. But for now, let's just move on. So apart from this, there are certain things that are like common for everyone. One is standard deduction, that is there for everyone. It's like a flat tax deduction of 0.5 lakhs. And then there is tax on employment. Tax on employment, I think it differs based on which state you work in. And it is this tax is taken by the state government, and they can take up to 2.5K. So it doesn't go above this amount. So yeah, these things also can be claimed as tax deductions, and now our taxable income becomes 6.915. Okay, so now if you're calculating our taxes based on the old regime tax slabs, our income tax comes to a total of 50,800. So yeah, now we have talked about the tax exemptions and deductions under old tax regime, and now let's look at the new tax regime. So in old tax regime, we had all these investment instruments that we can put our money in order to save taxes. When it comes to new tax regime, we have none of them. There are no options for you to claim tax exemptions or deductions. When you choose the new tax regime, your income is taxed purely based on your net income. Okay, there is no option for you to reduce your taxable income. So in uh, in our case, if you take the 12 lakh I mean 12 lakh annual income, and we choose the new tax regime, you will have to pay 1,15,000 as the income tax. So yeah, that is a difference in the new tax regime and old tax regime. In old tax regime, usually you have to pay low, unless you earn a significantly higher amount, like way above like 20 lakhs, 30 lakhs. In those cases, it might not make much of a difference to you. Or if you're one of those people who doesn't want to go through the headache of finding a good investment instrument, investing, gathering proof of investment, all that, if you're one of those people, then you can definitely go for a new tax regime. Otherwise, if you want to save taxes, you can opt the old tax regime. So yeah, let's move on to the next topic, which is filing ITRs. Now, before we look at how to file ITRs, we need to know certain three concepts actually. One is what is a financial year, what is previous year, and what is assessment year. Okay, these three things they can be very confusing. So you need to be careful about, like, whenever you're making a calculation or when you're filing your ITR, you need to make sure which of this year is mentioned. So basically, financial year means a financial year starts from April to March. So for now we are in the financial year 2022-2023 actually. This is wrong. Which starts from April 2022 to March 2023. Uh, in the calendar it looks like this. So yeah. So then we have the previous year and assessment year, and this is much more important. When you're filing ITRs. Yeah. Okay. So you have to file when you're filing ITR. The window for filing ITR opens at the April of a financial year. April is the start of financial year, so the window for filing an ITR starts on April, and you can go to this website eportal.incometax.gov.in to file the income tax yourself. Earlier, you had to go through a CA to do that, but nowadays you can do it yourself and you can do it online. It's very easy. I've done it before, but you have to make all these calculations. But filing and so on, the website they have made it better, so it's like uh, they have a better website and it's much easier to do. And you have to do that on the April. So let's say from April 2022 to the tax that was collected from April 22 to March 2023. For that, the income tax return you have to file on April of 2023. Uh, in that case, uh, like, okay, I'll just reiterate. Financial year April 2022 to March 2023, you have to file the ITR on April 2023. Okay, so in that case, the previous year becomes 2022 to 2023, and the assessment year becomes 2023 to 2024. So basically, previous year is the year in which your tax is calculated, okay, or the year for which your tax is calculated, and the assessment year is the year in which you will be filing your ITR. So that is what a previous year and assessment year is. It's You should be very careful of this when you're filing your ITR. Even I get confused a lot. I hope it's clear. If you did not get this, please ask. I'll explain this again. Okay. Uh, so yeah. Um, for filing an ITR, the window opens from okay. So for next year, in assessment year 2023-24, it opens on April, and you have time till July to file your tax returns. And I'm As far as I know, it will take up to September to get your tax returns. So I've told you about what ITRs are. Now, why do we need to file our ITR? So for that, we need to go back to the concept that I mentioned in the beginning, TDS. So uh, the income tax is deducted at source, and so okay, for example, in our case, the tax is calculated by an accountant, let's say, and the accountant only knows that your salary is 12 lakhs and you have opted for the old tax regime. So the accountant calculates your tax based on that, and based on that, your, let's say, your tax is 1,72,000. So based on that amount, the accountant will be giving your income tax to the tax department. So yeah, so let's say that's the only information that your accountant has. But we know, okay, so from the tax calculation we did so far, we know that our taxable income is only 6.9 lakhs. So what do? Our tax is already sent to the tax department, but we know what we should be only taxed for this much amount. That is why we file an ITR, so that we can get back the balance 1.12 lakhs. Okay. Uh, so yeah, that is one of the main reasons why we file an ITR. However, there is a way of preventing all this. You can inform your accountant that okay, I have this much exemptions, I have this much deductions, and my taxable income is actually 6.9, and I'm choosing the old tax regime and all that. You can give the accountant all this information at the beginning of or at any point during the previous year, and they will calculate the taxes accordingly. So I say you have to file taxes. You have to go to this account. I mean, you have to go to this website in order to file your taxes. I mean, file your tax returns. I have done this once, and I have recorded me doing it. I do not want to open the website and show you guys because it contains personal information. But I will show you screenshots of the website. So in the website, it contains basically all the terms that I've told you about. Like for example, salary exemption. We talked about tax exemptions, things that you spend on that you don't have to pay tax on. So and they have mentioned clearly what those things are. So for example, you have the children's education fees and hostel fees, HRA, LTA, and there are many other exemptions. Like let's say you get life insurance, like a person, yeah, a family member passes away and you get their life insurance, that is completely tax exempt. So there are certain incomes, like, or let's say you earn pension is also tax exempt. So there are other exemptions that you can claim under this.
Uh,
And
Jagannath, I
yeah.
have doubt. So basically, we all are working from home, right?
Huh.
So about the HRA, like since we are all working from home, we can't claim HRA, right? There is no rental thing and everything. But when
Yeah,
I look,
I'll talk about that. I have a answer for that. I'll talk about that later.
sure, sure.
Okay. Um. So yeah, if you have income from other sources, like other than your salary, if you have any income that you want to claim, that you want to inform the government, you have to inform them here. Then there is deductions. Also, these are also things that we talked about. Um. Okay, these three things we will talk about. They're also there. Okay, so here is ATC, ATCCD. I'm sure health insurance also there below. All of these you can enter here, and okay, here this is the health insurance. Like I said earlier, you have to. There are different sections for insurance paid for yourself and paid for your parents, and if they are senior citizens, you'll get if they are senior citizens, there is a higher limit of 50,000. So there is one thing you can use to make filling ITR very easy. It is called Form 16. Form 16 is something that your accountant or your payroll department generates based on the information that they have about your income and your deductions and all that. So let's say you inform your accountant of all these things. At the end of the financial year, they will generate a form like this called Form 16 that contains all these information. It is basically like an ITR that they fill on your behalf. It informs the income tax department about your income and how much income tax that you have already paid. So if and the employers are supposed to give this Form 16 to their employees. So once you get this, it will be easier for you to fill the ITR. So like if you see here, you have all these buttons. Like if you press them, they'll either show you how to calculate this certain thing, or they'll also show you where you can find this in your Form 16. So if you have a Form 16, it'll be very easy to file your ITR. So yeah, it'll look something like this. So another thing that I mentioned earlier is that, like I said, you can inform your accountant about what you're going to invest in for that year, or how much rent you have, how much tax exemptions you have earlier, and those things are called an IT declaration. You inform the accountant earlier so that they know what your taxable income is and they don't tax more than they have to. And that is what IT declaration is. In Great HR, you can do this IT declaration, and however, they disable it while they're calculating our salary. So, for example, now it's April 30 and they have disabled submission of IT declaration because they might have started calculating how much our monthly salary or generating a payslip. So for now, from today to I guess for 2 more weeks, it will be disabled. And once our payslip is generated, they will enable you to submit it again. So in IT declaration, you can keep on changing. Like let's say you plan on investing. Like earlier, I said you were planning on investing 1.2 in ELSs. Later, you decide, okay, I'm only going to invest 80,000. Can make those changes, but only within these windows, and based on that, your monthly salary will be adjusted. And also, but there is one thing you cannot change, that is the regime that you choose. This you can choose only at the beginning in your first declaration, and after that, basically, you cannot change it unless while filing your ITR. So once you choose either old tax or new tax, you cannot change it. The accountant or your payroll department will be generating a Form 16 based on this. But when you're filing your ITR in the website, you can change your regime. So this is one thing you cannot change in your IT declaration, but you can change in a file when you're filing your ITR, which is another reason for you to file your ITR. So basically, you can file your ITR if you have already paid more tax than you should, or more taxes was taken from you than you should be paying, or in this case, if you want to change your regime. And another good reason for you to file ITR is if you plan on moving abroad. In the application for your visa, they might ask for your income, and ITR. After you file an ITR, you'll get it's like a certificate or something. You can show that as your income proof, and it is the best form of income proof because it not only shows your income, it also shows that you pay your taxes on time, you calculate them properly and all that. You're a good law abiding citizen. So it is always a good idea to file your ITR. It can also serve as your proof of income. So yeah, that's all I have for showing you. If you have any doubt, do ask me. Okay, yeah. Who was it? Ajay Ghosh, right? He asked me a question about if you're working from home, how can you claim HRA? I'm also working from home, and I did look into this. So technically, you can pay rent to anyone except your spouse. Okay, you can pay rent to anyone except yourself or your spouse. So if you're living with your parents, you can keep a rent agreement with your parents, and you can pay rent to your parents and claim that under HRA. Okay. However, I showed you earlier. Let me see. When you are claiming HRA, you have to give something called a rent slip. Okay. If you are paying rent to someone else, some landlord, you only need that as your proof of investment. But if you are paying rent to your parents, and okay, if you're paying rent to your parents, rent slip isn't enough. You would have to show the rent agreement as proof. They might ask you the rent agreement as proof, and also it is best to give your rent through bank transfer, so there is proof that you actually paid your rent. So if you're working from home, you have an option of paying rent to your parents. However, you might have to provide more proof because the income tax department might be like suspicious. So I haven't done this so far. I will be moving in with my parents soon, and I will be doing this. This is something I plan on doing. I've heard a customer of mine did this. She paid her mom rent and claimed HRA. It is possible, but make sure you have all the proof. And as for everything that we discussed here, always keep the proof in your hand in case the income tax department comes asking you. So yeah, other than that, any other doubt?
Hey, thanks for putting everything together. So it was nice.
Thank you.
One missing thing was there. So in LTA, we can
Mhm.
only get LTA if we are on leave and going for some traveling. So if you go on some public holidays or Saturday, Sunday weekends, so that will not get.
No,
Uh,
that's fine. As long as you're traveling within India, it's you can claim it on the LTA.
they do check the uh, Saturday, Sundays and public holidays actually. Otherwise, they will
Okay.
not exempt. So that is one thing. Because otherwise, everyone like it's normal, right? Everyone travels, right? Otherwise, everyone would have applied, right?
Oh,
So
okay,
that's
okay.
why they have this rule. If you are not traveling, so it employ like we should be on leave that day, and then only the LT will get exempted. Otherwise,
Okay.
company itself will not allow. So
Okay.
that's one thing. Yes.
Thank you.
And one more thing,
Yeah.
uh, like one like basic confusion which everyone has about the PF, because there are two types of PF: employee PF and employer PF, and only one will get exempted in the salary, the other will not, will be taxed. So that is
Yeah,
one
I
thing.
think it's because you can claim only deduction on the EPF that was deducted from your salary. The other EPF is actually paid by your employer, and that's for, I think they get deduction on that. But you cannot claim
Yes,
deduction both of them.
correct. Correct. I just wanted to tell here so that
Ah,
everyone
okay.
will clarity on that.
I have a question. Like,
Okay.
yeah. So mutual fund does not falls under ATC, correct? Except ELSS.
Except ELSS here.
Yeah. So in our gray HR, I can see like mutual funds under ATC. Is that a bug or like something?
I'm not sure, but ELSS is the only thing you can invest in for getting deductions.
Yeah, but if you open the IT,
Yeah, I did see that.
yeah.
Might be an error. I'm not sure, or maybe they put that in case you are you don't know what ELSS is. Put it under mutual funds.
Maybe that's because ELS is a concept, but there are many mutual funds like which may name like in name they will be different, but the concept will be
Yeah.
ELS. So that's why I think.
No, but I can see both ELSS as well as mutual fund, like both of them, both of the fields.
Not sure.
I think they did it to avoid confusion, but it's only causing confusion.
Yeah. Also, one more question. Suppose if I'm paying rent to my, like the property is owned by my father, he is also a taxpayer. So if I pay tax to him, again, it will include in their income, right?
Yeah, they will have to include it in their income.
Yeah.
So yeah.
So is it possible if I pay rent to my mother and like,
if your mother
but
is an owner, then it's fine. But otherwise, you cannot do that.
no,
No,
but
actually you can, but it will like for your mother, like you have to pay, like you have to file the ITR, and it will come in the sublet, like it will be a sublet option of a property. So you can check it out on the Google. Like it is possible.
sublet. Sorry, can you repeat?
Yeah, just check income tax on sublet properties. Like it is like so if you own the house, and if you like if you are taking an income, so you can I think you can you will get a 40% deduction. But if you are like if you have an income that is coming from a sublet property, then you will not have any like deduction, like 40%, like there is some sort of calculation there. But you can check it out. Like I don't have an exact information around that, but yeah, it is possible.
Okay. Yeah. Thank you. I
Because
will.
I'm also doing that.
Okay.
If you find something, can you ping me with that
Sure,
link?
sure. Okay, Pratik, right?
Yeah, Pratik. Thanks.
And also, do you guys have any idea like how much when we are getting the form 16?
No, it's usually take time. But they have I think the deadline is on May. So you'll definitely get it before that.
No, but last time I received maybe. Let me check.
But last time the deadline was extended, right?
Yeah, extended till December.
So there is a deadline for this thing. So the employer will have to provide that before the
Last time I received on 22 July.
And one thing is, so for like when a fresher joins a company, like for most of the companies, the fresher in first year will not pay any tax, and he might think that okay, why he need to like fill the IT return, but we should do it even if we are like paying zero tax, we should do it, because in case we need a personal loan or something like that, the people will ask you for the IT returns from the previous years. Even if you are paying zero tax, that time also we should pay. That is also one hack.
Okay, so Jagannath, I have a doubt.
Yeah.
So in your declaration, imagine you declared that you have this much deductions possible under your this thing. Like whatever, let's say you have maximum deduction 1.5 lakhs of deduction that you've done. But what if in your proof you still have the same amount of deduction possible, but what you've given proof for is slightly different from what you actually declared?
You have to provide your proof on I think last year the window started on the last week of December to mid-January. So during
Yeah.
that time, they will look at the proof of investment and see how much you can actually declare, and then based on that, they will change your declaration and make the adjustments accordingly.
No, yeah, but what if the net amount of deductions in the proof is the same as in the deduction, but sorry, declaration, but there are some slight changes. For example, I named my mother as the person I'm paying my rent to, but it turns out in the proof I can only say that it's my father that's paying the tax to. Then sorry, the
Then I
rent.
think you'll have to
And
change it. Like you're saying, you provided the proof, it's done, but you'll have to change it later. Then you can only change it when you're filing the ITR.
the ITR, okay.
Yeah. After you provide your proof of income, you cannot make changes to your IT declarations as well. So after you provide your proof of income in January, you cannot make any changes. Yeah, the only change you can make is while filing the ITR. While filing the ITR, you can make changes to what your deductions are, your exemptions are, all that, as well as you can make changes to you can decide, choose another regime as well. So yeah, that is another reason why you
Okay,
have to
okay,
pay. You can file an ITR. You can make
okay.
changes based from what you already declare with your employer.
Declared, yeah, okay. Cool, cool. So there are no other repercussions as such
No, no,
when
no,
if
no, no.
that happens, right? Okay, okay,
The site might show you a warning saying that your the details you filled is different from what the information that they received. But that's just a
okay.
warning, just to inform you that there's a difference. But
Sure, sure. Hmm.
ITR is the final thing.
Okay.
So
The source of truth. Yeah.
if based on filing your ITR, it shows that you have paid more income tax than you're supposed to give. They'll give you back the money, and that's why it's called income tax return.
Returns, yeah, yeah. But what if like my declaration has been from the start and I don't have anything to get in return? I still have to might have to file it just to correct the declaration, right?
Yeah, you have to. Yeah.
Got it. Okay.
Any other questions?
Yeah, another question.
Yeah,
How did you make these slides?
Google Slides.
Oh, okay.
Yeah. I love making presentations. I love teaching as well, so I've been doing this for a long time. So
Any idea why window closed earlier when it is supposed to close today midtime?
the IT declaration.
Yeah, IT declaration window.
Yeah, they close it when they are calculating our income. So they might have started. I mean, not income. Sorry, our monthly salary.
Yeah.
So it happens every month. They'll close it when they start calculating our salary, and then once our payslip is generated, they'll open the declaration window again.
Okay. So we can declare maybe next month, like after 10 or 20 days.
Yeah, usually it's like within 2 weeks. Like after the first 2 weeks of the month, they'll probably open it.
Okay. Thanks.
I thought they will close window today night, so I planned to fill everything today and. So
Same.
Any other question?
So I think we got a nice topic for a Nito blog, other than technical.
Yeah.
Yes. Yes.
I guess then we can conclude this meeting. Thank you guys, and thank you Sangamesh for this extra information.
Yes. Thanks to you. Yes.
Thanks, Jagannath.
Thanks everyone.
Thank you, everyone. Happy weekend.
Happy weekend.
Yes, thank you. Happy weekend.
Bye guys.
Bye.